Hello, investors. In today's podcast, we will discuss investing. So, before discussing about investing, first we try to learn its basic definition. So, what is investing? Investing is an act of allocating resources, generally money, with expectation of generating an income source or profit. And we learn it with some examples. So you can invest in stock market to things may happen, that is you get dividends quarterly or as per your company policy over some regular interval of periods, or you can also see that share prices increases over some period of times. So this increased share price give you some profit, while dividends give you some regular source of income. And you can also invest in some asset classes like purchasing real estates. And if you purchase real estate today at some price, so its price may get appreciated, and this appreciated value uh, is your profit over some period of time. And please keep in your mind that it is not always as per your hopes. Means if you think a stock price goes high in future, at that period of time maybe some bad happen in that company and stock price of that company may fall from your purchase price also. Or when you buy a property, then that's come with some value. For example, it's you purchase a home at price of 1 crore, and after some period of time the value of that house depreciated, or you do not get appreciations in value as you think, and its price come at below the purchasing price, maybe say at 50 lakhs. So this 50 lakh may be your loss. So it's mainly depend on the your stock selection, your house selection, your location selection. So it's as per your selection or as per your investing strategies. And also keep in mind that every investing comes with two factor, that is risk and return. So these risk and return are the two side of the coin. So as you want an expectation of return, then it's also come with some sort of risk. Generally it is seen that low expectations come with low risk, while high expectations of return come with higher risk. But it's not always as true as we think it. And also if we discuss about stock market, and in stock market there are some companies which we called blue chip companies. These companies are generally large cap companies, and these companies give you low return but at lower risk. And there is company which we called mid cap companies or medium capitalization companies. These companies are give you medium risk at with medium returns. And companies with small cap comes with the expectations of higher return at higher risk. So it's up to you what stock or what risk you want to take to get your expected returns. If we talk with respect to India, in India there is an index Nifty 50. So companies in that index Nifty 50 are blue chip companies or large cap companies. And then Nifty next 50 is the group of mid cap companies, or Nifty mid cap index has the group of mid cap companies. And then there is a group of small cap Nifty small cap companies. So these small cap companies are you maybe source of higher returns but at a higher risk. if along with stock market, there is also many other sources to invest your money, like investing in cryptocurrency, investing in real estate, investing in a business. So there is many, investing in gold, investing in mutual fund, investing in ETFs. So there is many sources to invest. It's up to you where you want to invest and what is your risk taking profile. Generally, if we talk about stocks, generally stocks give you two types of return. One is dividend, which you get quarterly or as half yearly as per your company policy, and appreciation is stock prices. While bonds gives you interest every year or every quarter as per bond policy. So as an investor, you always have to do some fundamental research or some technical analysis to find good investment opportunity before investing. So also try to invest for long term, because it's seen that investing approaches of investing over long term come with low risk as compared to investing over very short terms. So day tradings, if you don't know very strongly about technical analysis, so day tradings always come with the thinking of speculations. So it's always come up with mind that I purchase this stock at 100 rupees and sell it at 120 rupees, so I get 20 rupees per day. So this is an purely speculation. It's not trading, not investing. And there are mainly three important factors which is very important to learn. One is amount of risk taken, another is holding period, and third is source of return. So amount of risk is the main factor which define your returns. So if you take low risk, then it gives you generally low return. If you take medium risk, it gives you medium return, and if you take higher risk, it gives you higher returns. But it's not always, as we talk early, there is some deviations also in this. So if you are very lucky and very good at selecting stocks, then you may also select some stocks which are very low, come with very low risk but high return also. But it's up to your value investing strategy or selecting very good stocks. Another factor is source of return. So source of a return is where you invest. Are you investing in a stock market? Are you investing in real estate? Are you investing in cryptocurrency? Are you investing in gold? So the source where you invest also defines your returns or profits over the period of time. So as we know, investment in gold or bank FDs, fixed deposits, is much less riskier than investment in stock market or cryptocurrency. I also say that investment in cryptocurrency is much more riskier than investment in stock market, because the price of cryptocurrencies fluctuate too much fast than stocks, and there is no regulator over cryptocurrency, but we have country specific regulators of over stock market. So stock market is much more safer than cryptocurrency. But I don't here want to say that you do not have to invest in cryptocurrency. You may invest in cryptocurrency if you want to take some high risk with expectation of high returns, because it's only on the game of risk and return. And another factor is holding period. So generally it is seen that holding period is very important, and it's 99% true that maximum holding period gives you maximum returns, because investing over very short period of times is generally come up with speculations, except for that 1% persons who have very strong technical analysis knowledge, so they manage their charts of trading and get profits from that chart by reading that chart. But maximum people don't know what is technical analysis, what is fundamental analysis, so they don't get profits over very short period of times. For them, long period holding time is very good, and they get returns over the long period of times if they hold equities, if they hold their investments over long period of time. And it's all about investing, and I think there is nothing left. Another thing I come up in my mind is that investing also is a game of emotions, that is greed and fear. As Warren Buffett say, if there is a greed in stock market, you have to sell your investments, because maximum people want that stock at that higher price. So you have to sell that stock at that higher price because it gives you good return. And when there is a fear in stock market, maximum people want to sell their stocks at lower price also. Then you have to purchase that stocks at lower prices also, because you get stocks at very bargain prices. So it's very true, and we also see it in during this pandemic COVID-19 period. So in this COVID-19 period, or SARS-CoV-2 COVID period, so in this period we see stock prices come up very base, or come up very low prices. Index of India comes around 8,000, and it falls from 12,000 to 8,000. So you get stocks at very bargain prices. So don't lose this sort of opportunities. Buy stocks or buy investments at bargain prices, and sell them at higher prices. So happy investing. Do invest in good stocks, good investment opportunities, and get big profits. Good luck. If you find this episode interesting, do follow us, do subscribe us to get more information about investing, how to pick good stocks, value investing, and much more. See you soon in our next episode.